Hello everybody, welcome to our market report. My name is Christian Charlo. Today we're Wednesday, February 27. Today folks, I want to talk about an announcement that was made by Ben Bernanke when he faced the Senate Banking Committee, and he said that he was in favor of the loose monetary policies because he thinks that under the current market conditions that those loose monetary policies are the way to go to continue to stimulate the economy. It's not time to withdraw all the money as some members of the Fed have advocated for in the last FOMC minute, and that's why they created some downward momentum in the last few weeks when the FOMC minutes came out. So with Ben Bernanke's statement that says that he's in favor of it, even if he's not the one that only calls the shot, there are several members there, but still that kind of reassured investors that if Ben Bernanke is for it, well, maybe he's going to be able to rally enough members to pursue this policy. So what we had a lot of breakouts in the markets, and I'm going to show you a list of the best technical breakout that we found, mostly in the energy sector, because that's a sector that really stood out today. Some sectors in the consumer staples, some also in the financial sector, and the industrial sector also that are actually going up on that news that was made by Ben Bernanke. So with this, we have those are the stocks. First of all, Energy Transfer Partners, which is clearly breaking that resistance it's in the energy sector. There's also Range Resources, nice upward trend that is maintained, clearly breaking all those resistances of 2011 and 2012. Enbridge, on the TSX, it's much more better though to trade Enbridge as compared to the American ones, because Enbridge here on the TSX is clearly breaking that resistance and keeping a nice upward trend. So favor Enbridge on the TSX if you wanna open some positions on that stock. GM Smucker, I love the upward corridor. It made a breakout here, and now it's a second breakout for GM Smucker. There's also Tempur-Pedic, which is clearly keeping an upward trend and breaking that resistance. And there's Canadian Pacific Railway in the industrial sector. You know, with the loose monetary policies, this is an indication that they're going to be eventually more growth or continuity of the growth, because continue to be easy credit. So more growth, more transportation of goods, and Canadian Pacific Railway will be, of course, a company that will benefit, and that's why the stock is keeping a nice upward trend and breaking that resistance. There's also CME Group, which is clearly breaking that resistance, and we have two stocks here which are moving clear breakouts, nice technical breakouts, but they're moving on earnings. So we tend to not recommend those stocks on marketgurus.tv that you can get for 10 days for free, for your free trial of 10 days. So that stock like AES, yes, it's clearly breaking that resistance. Yes, it is reversing that downward trend, but it's moving on earnings. So because of that, we're not going to recommend those stocks in our analyst choice on marketgurus.tv. But technically speaking, this stock is really good. Dollar Tree Stores also, same scenario, clearly reversing its downward trend, clearly breaking an important sideways formation. So Dollar Tree Stores is also one of them. So those are the stocks going from Energy Partners to Dollar Tree Stores. AES and Dollar Tree Stores have earnings, so on those two stocks I would recommend half of the positions, while for the other stocks, well, you could open full position, except for Enbridge here. Favor the TSX, because on New York, Enbridge is actually not in a buying signal, and mostly the energy sector is standing out on the statements made by Ben Bernanke that is in favor of the continuity of the loose monetary policies. So that said, see you next week for a market report. Don't forget that you can always get access to all those breakouts and many more live on marketgurus.tv that you can get access for free for 10 days trial on the link below on this video. So that said, see you next week for a market report. And don't forget, folks, that the more money you make, that's the happier we are. See you next week.